I think we're ready to get started for the deep dive this morning. So I want to say welcome to everybody that's joining all across the country online to start their week really the best way possible, talking about what's most important in real estate today. So, last week we talked about mortgage rates, certainly a volatile environment that we're seeing with mortgage rates and all the sort of economic data that's coming out. We'll talk about affordability this morning. That leads us into the affordability topic, and certainly it's been a topic that has been challenging over the last year with rising prices, rising mortgage rates, makes homes less affordable. But I'm going to give you all the facts, what's out there, and even what I believe are some optimistic and sort of brighter days ahead for affordability, which is a good thing. So. Like always, put in the comments where you're watching from. It's so good to see people from all over the country that join the deep dive each Monday morning as we get started the week talking on these topics. Really the purpose of the deep dive is to give you everything you need to be the educated agent on a topic, really to go deeper on it. So that you have everything out there. So really, you could be the most educated agent on one of these topics. So, we'll talk about prices next week. That's going to be a fun topic to get into. I'm going to share my screen here. We'll wait and give it just a minute to let everybody join that wants to join. There's always so many people that join the deep dive. And so good to see them. So the deep dive, we'll get started. Affordability still a challenge. That's our topic this morning. And I want to sort of put a question maybe on the table here this morning. Let you decide that. Is it as big of a challenge as we think it is? I'm not going to deny that there are issues with affordability. It's certainly less affordable to buy a home than it's been in the last 10, 20 years. I'll break that down for you. But it's also, some sort of glimmers of hope relative to affordability that I want to talk about. But Odetta Cushy said this: when you zoom out, affordability is still very, very low from a historical perspective. And that's certainly true in housing. I think it's true in probably every area of our life. Affordability is a challenge. You go to the grocery store, inflation has impacted so many areas of life, housing being one of those. And I want to give you sort of a picture of affordability right now. We always use NAR's Housing Affordability Index. This is a look at it right here, going all the way back to 1990. You can say right now with confidence, homes are less affordable today than any time between here and 1990. And there are a couple things about that I want to point out. The way you read the Housing Affordability Index is the higher the index, the more affordable homes are. And so you see us kind of trucking along in the 90s and early 2000s, and then come along 2008, the orange bars there, years when distressed properties dominated the market, and affordability was very, very good. And even over the last almost 10 years post 2008, affordability has been very, very good, even more affordable than the years prior. And we're coming out of that time period in affordability in this country. And so it's something that I think we need to be the expert on. It's something we need to be talking about. We need to help guide people forward in this affordability equation. There are three things that go into affordability, and I would have these sort of at the tip of my tongue, and I would have a relevant market opinion based upon these things that affect affordability in housing. The three things, they are wages, what people are earning out every day. Mortgage rates affect affordability. We know we're in a volatile market. We talked all about that last week. If you didn't see the deep dive last week, you can go back on Facebook, or if you're a KCM member, go out and grab that. And then third, home prices affect affordability. These three things come together to give us the picture of affordability. And so what do we know about each area here? Well, if we sort of break them down, first one, wages. We know right now that wages are climbing at a faster pace than they have for the past 10 or so years based on, sort of the upward trajectory is measured by the Fed. And that's a good thing, right? People are earning more income. They're making more money. That means they have more, income, certainly for housing. But as wages are climbing faster, that bodes well for affordability into the future. First piece there. Second piece, mortgage rates. Again, we talked about this last week. If you remember this, this is the latest projections from Fannie and MBA and NAR, the average of all three. And we sit today, I was looking this morning, sit right around 7%. We're bouncing, back and forth there. But the projection overall as we go throughout the year is to see a mortgage rate environment where we're, in the low sixes for sure, if not dipping our toe into the fives. That would be a very, very good thing. That makes homes more affordable. That's a good thing. The third piece of affordability is prices. And you see here the 2024 home price forecast. The average of all seven of these forecasts is 3.2. I think we'll see a little bit more price appreciation this year than what this average is, maybe somewhere between 4 and 5%. That is a good thing for affordability because we're not seeing the appreciation we saw in prior years, 15%, 20% in homes across the country. So, if you stack these things up, wages are growing at a quicker pace. Mortgage rates are projected to come down and homes aren't appreciating as quickly as they have in the past. Here's the bottom line. I think today you must have a relevant market opinion based upon the facts of affordability. So those are the facts. Homes are less affordable. You use the NAR's Housing Affordability Index to communicate that. The three things that impacted. Here's what I believe. And you don't have to have the same belief as I do, but you have to use facts to help communicate to people. This is what I see relative to what's happening with affordability. And so that's something that we want to communicate. We want to get out there before the narrative of you can't afford a home sort of takes people over. I think it's harder, but I think there are things you can do. And I'll talk about that here in just a minute. But if you look at the facts around monthly mortgage payments, it's very, very interesting and almost shocking to look at, starting at 2021, the average affordability through the year of 2021, around $1,000, upwards of $1,200, $1,300, $1,400 is you start 2022. And then average mortgage payments start to climb and really peak sometime around September, the fall of last year, and have come down over the last several months in this country. Now, I think no doubt as we see a more favorable lending environment, maybe more favorable 30-year fixed mortgage rate, we should see mortgage payments come down even more. But those are the facts relative to mortgage payments climbing in this country. And certainly a lot of that happening as rates have gone up. But here's some good news about affordability. The median household income in this country versus the qualifying income in the U.S., it is the median income, family income, is higher than the qualifying income. That is a good thing. The only place where things are out of whack in a big way is out west on the West Coast. You see the median family income, $109,000, the qualifying income, $145,000, largely out of reach on average on the West Coast. But you see each area besides the West where family income is above qualifying income. That's what we want to see. And as rates start to come down throughout the year, we want to see more of that. We want to see a better position for people to step into the market and buy a home. I think this is a great statement from Redfin. Elijah says, we're slowly climbing our way out of an affordability hole, but we have a long way to go. I think that is a great statement, very true. Rates have come down from their peak and are expected to fall again by the end of the year, which should make home buying a little more affordable and incentivize buyers to come off the sidelines. We talked about, I think it was a couple months ago, on a deep dive and maybe in our monthly market report, the number of people that gave up their home search last year because of rising mortgage rates. We'll see those people come back in. We'll see affordability get better. Another aspect of affordability is payment to income ratio. Generally, according to NAR and certainly guidelines, you want to keep that in housing below 25%. Well, today it's at 23.7%. Over the end of last year, we bumped above that number, but certainly not down where we were in the last couple of years, but below 25%. Which is a good thing. According to Realtor.com, I think this is where sort of the essence of the conversation becomes: should I buy a home right now? And among the top considerations are the financial cost and benefits of renting versus owning. And one approach is to compare the monthly cost of renting a home against a buying cost. This is the old, should I rent right now? Is it cheaper to rent? Go on to say, with such cost comparisons, we can identify whether a market favors renting or buying. This is particularly important given today's landscape marked by elevated mortgage rates and still high home prices, posing substantial challenges for would-be home buyers. So this is speaking directly to, the idea that I can go out and rent an apartment, I can rent something cheaper than what I can buy a home for. And we've talked about this a number of different times. We've talked about this in the one thing that always combats that or kills that argument is equity, the accumulation of equity. And we've talked extensively at KCM about equity and the advantage that people have in that. But let's sort of take a look at this report and what they say. So this report, Realtor.com and NAR, monthly mortgage payment on average in this country, $1,984 on average. And you see there the different types of apartments: studio, one bedroom, two bedroom overall. If you take, the overall cost of rental in this country and the average monthly mortgage payment, you could technically say it is cheaper right now to go out and to rent something than go out and buy something. Now, there are a lot of factors that go into that, and people say, well, you can, rent something or buy something bigger than what you would rent an apartment. All those things are true. But if you just take the averages and the average monthly mortgage payment, the average rent, it is true that in the 50 largest metros in this country, you could technically rent cheaper than what you could buy. Now, here's where I would apply that formula of equity. If we go back to the home price expectation survey, which we've talked extensively about, if you're a KCM member or followed KCM, you're familiar with that. If you bought today, the average home in this country, that is worth, in price appreciation over the next 5 years, just over $83,000. So buying today, buying the average price home in this country worth just over $83,000 in equity price growth over the next 5 years. That's very normal price growth, around 3 or 4% as we go through the next several years. Well, if you do the math on that, and I would highly encourage you to look at what is the average rental, what is the average home in your area, and do the same thing and apply the home price expectation survey to that. If we do the math, we take the equity from home price appreciation, we take the additional, sort of cost, if you will, and the difference between the average rent and the average purchase. In this case, it was $16,560. It was $276 a month. And that supposes that you have that extra income to be able to go out and buy. You're still ahead $66,000 over 5 years. So is it cheaper to rent or to buy? You could say, okay, in the payment every month, factually, you could say, okay, it's cheaper. But when you add in equity through home price appreciation, you come out ahead $66,000. And you could add things to that. Well, what about insurance, David? What about that? You still come out ahead. It's still a wise decision. I think helping people see that right now is what we need to do. See that home ownership over time wins. It's not timing the market, it's time in the market. It's helping people see that in light of everything that's being said about, are homes less affordable, all of those things. And even, I think where this impacts most people in our country today is younger generations, people that are coming out of college that wonder, will I be able to buy a home? Certainly there are grants, certainly there are advantages for first-time home buyers, there are advantages for first responders, all the things we know about. Yes, you can. It's a little bit harder, but it's the best decision you can make. And so I think keeping this top of mind, showing people this is what it looks like to go out and buy a home today is what we need to do. I'm going to end on this quote right here. From high prices to low inventory, potential home buyers know it's gnarly out there. But if you're ready for home ownership, the long-term benefit of buying often outweighs the pain of toughing out the search, even these days. So, so true. The advantages of buying, we know all of those. We know the financial advantages. We know the non-financial advantages. And our job in being the educator in this world, certainly as we're dealing with so many people talking about the NAR settlement, our job is to show our value and show what we can do to help somebody obtain the dream of homeownership. And I think affordability gives us a chance to step into that conversation and be the educated agent, be sort of the knowledge broker on this topic out in our market, saying this is what we're seeing right now. Here's how we overcome it. Here's how you navigate that as we go forward. Next week on the deep dive, we're going to talk about home prices and their impact on sales. So we're kind of this journey of mortgage rates to affordability to home prices ultimately, and what that looks like as we are in the spring market. So hope you have a wonderful week. Thank you as always for joining the deep dive. It's the best way to get your week started. Share this information with somebody that you know needs to hear it so that we can get it out there with everybody. We'll see you back next week.